In today's video, we're going to have a little bit of fun. We're going to compare QQQ, which is the NASDAQ index fund, up against Cathie Wood's ARKK. Or ARKK. Anyway, so basically these are two amazing ETFs. I like both of them. I really like Cathie Wood, so let's get down and let's check out both of these ETFs and see which one is better. So first off, QQQ is a NASDAQ index fund. It covers the whole NASDAQ, which is some of the top tech companies in the United States. Its yield is 0.5%, so of course you're not buying this for dividends. However, at the same time, we're seeing massive volume, which is fantastic because it's going to be easy to get in and out of, and the expense ratio is extremely low at 0.2%, which basically means that for every $100 that you put in, you're essentially going to give them 20 cents, and that is for them to manage your money. Anytime you want people to do something for you, you have to pay them. So anyways, from there, what we want to see is if this is any good. And over the past 5 years, this ETF has gone up about from roughly $100 to about $360, which is about 3.6x over the past 5 years. This seems to have some pretty fantastic growth. It's pretty well solid. Of course, we had that hiccup earlier last year, and of course we had 2019 happen, but other than that, there's always at least one massive downturn every single year. We had one recently here. Of course, this is what's going to happen with stock markets. We always have to have at least one big pullback every single year. Just of course, this one was just huge. But wouldn't that be a fantastic time to buy it? Oh my god. We can see that this does pay a dividend about every quarter, and it pays anywhere between 40 and 35 cents-ish, and of course it does vary between quarters and between years. When it comes to holdings, this is going to be the massive part. When you're buying ARKK and Cathie Wood's ETFs, you're generally going to be buying it because of the companies that she holds. Meanwhile, with QQQ, what you are getting here is, of course, just the top companies at the same percentage as to how big they are anyways in the index. So Apple and Microsoft lead the index for obvious reasons, and then Amazon, Facebook. Isn't it amazing how these tech companies just magically happen to be the biggest in the world? And even Alphabet, the Google team, like all of them are huge. And then finally Tesla. Tesla is a small little holding in here. Technically, it's only 3.9%. It's not all that big. However, they also have Nvidia, both Alphabet stocks, PayPal, which is technically another Elon Musk company, but he sold out, and then Adobe. But remember that Tesla here is only 3.9%. ARKK is another ETF that is absolutely amazing, and Cathie Wood's is just insanely amazing. She's very smart. She has her own YouTube channel. However, this ETF's MER is much higher. And generally with a much higher MER, you're going to see a more actively handled ETF. So what you're hoping here is for higher growth. In theory, this one should outperform QQQ if you really think about it by at least 0.5% a year or more, because you're paying that much more than QQQ. This one doesn't have a dividend, which some of the companies they do hold do pay dividends, and I would just assume that it would just pay out that dividend either once a year or reinvests it itself. Again, this is another ETF that has ridiculously high volume, which is good because it's easy to get in and out of. And if we compare the beta, which is basically a beta of 1, would be exactly where the S&P would be versus the beta of QQQ. QQQ is 1.02, which is in line with the market, which is crazy if you really think about it, but it's its own market. If we look at the chart, we can see that about 5 years ago, this was trading at just under $25. Now, if I wish I had my arrow over top, which I didn't. However, we can say it's about $20-ish, let's say, as an example. And of course, it topped out at just above 150, and now currently sitting at 125, which is about 5x, if not technically more. Could be 6x depending on when you look at it. So of course, this has substantially higher growth, which is why you would be paying a higher MER. Now this one does pay a dividend. It's about once a year, and you do get one large lump sum. It's not as going to be as big as QQQs, however, you do get at least a once a year dividend. Now, here comes the holdings. Remember what we had when it came to QQQ? Well, Tesla was 3%. Well, now it's 9.5%, which is where most of that growth came from, to be honest with you. Everything else on this list is different than what is on QQQ. We do have Shopify, and Shopify is a great company, and it's actually a Toronto exchange stock. So what we're seeing here is, of course, some very interesting and futuristic looking stocks. So for example, Roku, the streaming service box, Teladoc Health, Square, which is a payment system, Zoom, which is of course what everyone's been using since the coronavirus, Shopify, Spotify, Twilio, as well as Coinbase. That's a very interesting ad right there because, of course, we're seeing massive growth in that area of the market. And then Unity Software. So basically what you're looking at and what you're comparing is QQQ, which is an index fund, versus ARKK, which is a Cathie Wood's fund, which is not your typical ETF. So what ETFs generally do is they invest in safe companies. They want it to be super safe. They want your money to be safe. Well, Cathie Wood wants that as well, but she wants to look into the future. What is going to be big in 5 years? What is going to be big in 10 years, 15 years? And she's looking out 5-10 years right now, and these are some of the companies that she thinks are going to be big then, while QQQ is what's big now. So, what are we getting to? We're getting to Cathie Wood's ARKK ETF is more future looking. It's going to have higher growth potentially in the future, while we have QQQ that may have higher growth right now, but not necessarily in the future. I hope that this video's helped you and, of course, your investing future, and, of course, what you want to look at into the future, or whatever it is. Thank you for watching. I hope that you enjoyed, and I'll see you guys again next time.